So I'm going to go over this simple strategy I just found that is working out so well for day trading using just two indicators that I've created this YouTube channel, and it's all going to be based on this strategy, and I'm just going to be recording all the trades. So the strategy is using this indicator called the whole suite, and it's this one right here made by InSilico. So go ahead and add that, and then the inputs, if you go into settings, just change the whole the length over here to 39 instead of 55. So that's what works best for day trading, and basically you're getting in when it's green and you're getting out when it's red, but it's more complicated than that. I'll go over it in detail, but first you add the moving average exponential, the 200-day EMA. So then right here under settings, change the 9 to 200, and I like to make it yellow. And so basically the strategy is that once it turns green, the whole right here, then one green candle closes above it and it's over the 200 EMA, which right here it's not, so I wouldn't go in there, but right here is a good example. So it turns green, a green candle closes above the 200-day EMA, so this would be your entry point right here. Stop loss is set on the 200-day EMA. The entry is right here, and then your profit target. So what I usually do is I sell half at 1%, and I set my stop loss to where I bought it at, and then I let it ride up until the whole turns red. And if this is the end of the day right here, so if it's just the end of the day, I'll sell up here. So this would have been like a 3% profit there. Now there's some optional for added safety if you want to add more criteria. That'll help, because I usually go in on large positions doing this, so I can go over what I do for that. So in order to add more indicators though, you need a paid account on TradingView, but it helps, and I think it's like $150 a year. So the RSI is the first one, and I make sure that the RSI when I enter is not above 75, which is pretty high, and it's usually, so it's like, if it's above 75, it's like super overbought. And then I add the TTM Squeeze and Momentum. Let's add that. So this is by Drecken, this one right here. And this basically is an indicator for breakouts. So like these little red dots indicate like some consolidation, and then on the first green dot you would get in right here in this ball. Oh, and this is okay, really important. It's got to be 5-minute candles. This doesn't work with the 1-minute candles because there's too many like false breakouts. You see how it's turning like green, red? This is where you lose money. Like it turns green right here, you would buy in, and then it turns red again right here, you'd sell at a loss. So it's kind of smoother, and like also the great thing about this strategy is it's like pretty stress free, not really time consuming. You're doing like 1 or 2 positions per day. So the TTM squeeze, I just make sure that it's green and the little line is pointing above the 0 line. That's another confirmation. And this is just changing the colors if you want to do that under the settings. And then consolidation zones live, this is great. So the strategy doesn't work when the market is consolidating. It only works when it's like big swings. So you don't want to trade when the market's consolidating. So I add this indicator right here Consolidation Zones Live by Lonesome something. There it is. And this will kind of point out areas where the market's consolidating, like right here. And I change the settings of this a bit. So I get rid of the plot, get rid of the lines. I make the color gray. And under inputs, I do 15. And sorry, one more thing. Under style, just make sure that's gray. Okay, so I basically just don't enter a trade when you're in the gray over here. And that saves you a lot of false signals. So, okay, the buy criteria. So you enter when you got a green 5-minute candle closing above the hull. And if the candle's like red in the beginning, so you got right here, for example, the hull turned green, you're in the consolidation zone, you got a red candle right here. And then if it's a couple candles later where it breaks out of the gray zone and the candles are green, so I would enter into a position here. And as you can see, it would work out nicely for like 1.5% profit if you're selling at the top, and then if you're selling right here when it turns red, then it's a smaller profit of just like 0.25%. And okay, so it's always above so the hull should be like very slanted when you enter, and it shouldn't be horizontal. So right now the hull is like horizontal right here, confirmed by the gray zone also, but it's like when it slants up, that's when you should enter. And it's always above the 200 EMA. So I kind of treat this line right here as like the surface of an ocean. So if you go below it, like you can't breathe, you're drowning, you just have to get out immediately. Kind of silly, but works for me. And sometimes I do enter on the break of an EMA. For example, right here, well, that's actually not market hours, that's not a good example. Okay, right here is good. So it turned green and it like just broke the EMA right there. So I would enter this position and it would be 1.2% profit. But if it's like way later where the break happens, like if it happens after like about 5 to 10 candles later, then I probably would just like sit this one out because it already kind of had its run at that point. Okay, during market open, I go in after the first 5-minute candle closes. So if this is a short position, it's trading below the 200-day EMA, the hull is in the red, I wait for this candle to close before I trade in the morning. And then I'm buying here for a short position, and you can see that it immediately goes down 0.5%. I wouldn't sell there, I'll talk about. So I only set my stop loss really when the hull turns green, or it goes above the 200-day EMA on a short position. So on this trade, I wouldn't sell here. I don't set like tight stop losses. And then this goes up 0.5%, but then the hull turns green right here. So I'd probably just sell at break even right here. Just giving you plenty of examples. So the loss, I sell all immediately when the hull turns red. So I set an indicator for that. So, okay, let's take another example. Okay, let's say, okay, that's below the 200-day EMA. Okay, right here. So the market opens, I wait for this candle to close green, and it's above the hull, and the hull is green. Over here, I would enter a long position, And I would set an alert right here. So if you go to whole suite, you hit these three little buttons. You do add alert on whole suite, and then you do whole trending down, create, and then I always sell everything when the whole turns red, even just a little bit. And that's pretty much my stop loss. So sometimes, usually that's like around like a small loss. Once in a while, it's like up to like 1%. But so I also set a stop loss no greater than 1.5%, like near where the recent low is, recent swing low. And I also sell all if it dips below the 200 EMA. For a win, this is just the way I like to do it. I sell half at any resistance around 1%, and then I set the stop loss to where I bought it at. So in this particular case, this is 1% right here. So I would sell half my position right there, and then I would set my stop loss here. And then I do the same thing for, this is 2%. I do the same thing for around 2%, wherever the resistance is. There's no clear resistance, so I would just sell another half there. And then I sell the rest when the whole turns red. So I would sell the rest down here. Another kind of fake out, that another situation where you get a lot of false signals is when the 200-day EMA is flat. So like right here, for example. So when that happens, I'll still get into trades here, but I sell early, so I wait. Instead of 1%, I just go to like 0.5%. So in this situation, the hole's green, but you're getting like a bunch of red candles, and it's in the gray consolidation zone. Over here, it breaks out of that, and so I would get in right here, and then that's a 0.72 profit, but I would sell at 0.5 right here and set my stop loss to where I bought it at. So I would sell half right here and set my stop loss to where I bought it. So anyways, this has been working very well in terms of just making 5% a week. It's consistent, and it's also stress-free because I'm just setting alerts. Like, I'm not watching the charts all day because I got a baby and I got a job. I'm a TV editor, so it's not really that time consuming. And the 5-minute charts is way more stress-free than the 1-minute charts where it's like this gives you a heart attack. But anyways, that's the strategy. So I'm going to be logging all my trades doing this, and I'll see you on the next vid. Thanks for watching.